We also have Siddharth Purohit of Angel Broking joining in. Siddharth, how would you rate the numbers? Absolutely no surprises whatsoever. How do they rank, and in terms of the asset quality performance?
Yeah, in fact, the number has been almost in line with our expectations, both on the bottom line front. But there has been a positive surprise marginally on the asset quality front. Sequentially, as you see, there is a marginal improvement in the gross NPA level. That's a very good outcome. And possibly there's some little higher growth than what we expected in the NII front and little on the other income front. So certainly there is no negative outcome, and it has been almost in line with what we were expecting. And this has been a trend for many quarters right now, and we believe that this is likely to continue given the current quarter performance.
Yes, absolutely. No surprises which have come in terms of the advances growth as well, which has come in at around 27% on a year-on-year basis. They have the domestic retail loans which are up 29.7%. So again, the domestic retail loan is really what is driving the total loan book, and wholesale loans which in fact grew 27.2% on a year-on-year basis. So that's on the loan book. The bank's capital adequacy ratio, never been a problem really, is at 15.5% as against the regulatory requirement of 9%, so no problem coming in there. Asset quality, little more details coming in, where they have mentioned gross NPA 0.94, net NPA 0.3, total restructured loans were of 0.1% of the gross advances as of March 31st, 2016, as of 0 versus 0.1% on a year-on-year basis. So no real movement which is coming on the.
Joining us to talk about it is Kishore, the CEO. Good morning, Mr. Kishore Babu, and thanks for taking the time out and speaking details. So
overall, very stable set of numbers. In fact, the stock is reacting to possibly that little bit of improvement which has come in terms of the cross NPLs. Siddharth, if you had to hear some commentary from the management, what would it be? And based on the numbers, do you think the net interest margins are stable at over 4%?
Yeah, given the number, I think it should be stable.
If you could help us with.
Now, what we would like to see is that would there be any impact from the MCLR, change of lending terms to MCLR, and the question is that how they are going to really plan out their business further, whether they given that corporate loans will start picking up, would they like to expand their book and from that also, other than just expanding retail. That is one key area we would like to know. But so far, since they have been doing pretty good numbers expanding their retail loan book also, I don't see any problem expanding that book also. But I believe since they have a very balanced portfolio, so they will be in a very good position to expand their loan book, both from the retail as well as from corporate side. And we'll look forward for better numbers in FY17 as well. We'll clearly wait for more guidance from the
Sure. Ravikant, the stock has already had a very smart rally from the lows of March. Looking at the performance and the very stable numbers that the bank has delivered once again today, do you think there's more headroom? It's still about 2 to 3% off the 52-week high. Is there more headroom?
Well, you see, I'm commenting on that. If I heard you right, the loan book growth has been reported at 28% year-on-year. Yes. I think that's a very strong number.
7% advances, and I think around 28% in terms of retail and thereabouts for wholesale as well. Over 25% for
right. So I think that's a very interesting number, because until third quarter, I don't think the street has been penciling in this kind of a number. So I think everyone would be looking out to what kind of a growth the management gives out. Typically, HDFC Bank management talks in terms of a multiple to the real GDP growth. So our expectations were the loan growth is going to stay somewhere in the region of 20 to 23%, and this seems to be a very strong growth. Whether it's sustainable is something one needs to look out for, and if it's going to be so, then I think you are going to see some earnings upgrade coming in for HDFC Bank. So definitely there's further upside.
Okay, so Ravikant, if you had to point out two of the key highlights of this quarter's numbers which has surprised you positively, what would it be?
So I don't know if I have two positive surprises to point out, but one positive surprise for me is definitely the very strong loan book growth, and I wasn't really expecting surprises on the margins or even for that matter on the asset quality, as I pointed out earlier. But the loan book growth is definitely a kind of a positive surprise.
Okay. And Siddharth, what about you? What are the key positives that stand out for you for HDFC Bank this quarter, as well as your NII estimates?
Despite this strong growth, they again improved on the asset quality. That is really a very commendable job, and that is what I believe is a very positive check from my side. And we believe that they are going to deliver similar numbers, somewhere close to 25% kind of loan growth what we will be expecting. And obviously, as I told earlier, we'll seek more clarity if they would intend to get into some kind of corporate lending. They will try to accelerate on that. So I'll say that more or less, they have positively surprised on the asset quality front and also on the loan growth part. These two things are definitely a very positive check from the result.
Sure. So just to recap the full year loan growth numbers as well, 27.1% total advances growth. That's March 31, 2016 over 2015. And the breakup, of course, is retail loans 29.7%, wholesale loans 27.2%. So that same question to you. The stocks already moved very smartly along with the rebound that we've seen in the rest of the pack. But looking at this performance, the kind of advances growth that we've got, the stable asset quality, how much more headroom would you give to HDFC Bank?
See, as of now, we still have a positive stand in the bank, and we feel that there is still room for further appreciation in the stock price, and we believe that another 15-20% kind of upside is in the 1 year's time is possible, with further possibility of upgradation of earnings in the coming quarters. Because we have not seen any kind of stress on the loan book despite challenging macro environment. So I believe that there is a possibility of earnings upgrade post these quarterly numbers.
And Ravi, same question to you. You would be, of course, reworking your numbers, but what's been your target and how much of an appreciation, roughly a percentage increase, would you ascribe to HDFC Bank?
So our price target is 1224. I think maybe we might look to upgrade it, but as of now it's 1224.
Fair enough. Ravikant as well as Siddharth for joining in and taking us through what has been another stable quarter for HDFC Bank. In fact, a tad above expectations on certain parameters such as the gross NPL, which has managed to in fact improve this quarter. The street was hoping that they'd at least sustain its sub 1%, and improvement is a positive. We will wait by for the management in terms of commentary with regards to the internals of the asset quality and separately the advances. Last quarter, Surbi, the advances were up 25.7%, and this quarter they bettered it with a growth of around 27% in their total advances book. NII good enough, up